Welcome back to Let It Grow Investing. I'm Jeff. Thank you guys for stopping in. Let's get right into the podcast. Let's talk stocks. Crazy week out there. Volatility in a couple different places. Some earnings news. What I'm buying and a couple reasons as to why. Well, first up, I'm buying more Netflix, more Celsius. Bought some Tesla, a couple other things. Bought some silver. SLV's the ticker there. And I was trying to add to a couple of these positions that I just kind of thought they made sense right now. Looking at my orders, also bought some e.l.f, bought some XYLD, a little bit of ServiceNow. And I did start buying some SPCX. I told you guys I was probably looking in the 110 range. I did start buying some of this around 130, 135, below that IPO. And kind of kept averaging down. And I think we did get into the mid one teens area. So that's what I've been doing. Also talked a good bit about Micron options. I did buy a call option that was not a covered call. It was actually just a straight call option that expired on Friday. The price of Micron stock got under like 870. It got around 50, I think might have been around the low, but I bought the call option around that 860, 865 price point for a 920 strike price, meaning that if it got over $920, I would have been able to buy those shares at $920. So it went up to 990 something, and you would think that means I did really well on it. There was a lot of noise around the Chinese semiconductors, right? So Micron and all the chip stocks got obliterated, which gave me a good entry, but then that news cycle just kind of kept coming, right? So we really couldn't get out of the way of it. I had bought it the Wednesday prior to the 24th, so like 10 days prior, not 2 days prior. And I was trying to hold it, trying to see if this thing could make some more money. In a Facebook post, I said, hey, if it doubled, I'm closing this thing early. I thought it could go from that $4,200 that I spent on it up to around $8,000. It did do that, but it did that just a couple days later than where I felt comfortable holding it. So it didn't go the way that I thought it was going to go. I ended up selling it on Monday, and it was worth around $3,400 at that time. So the thought process was there, but the execution was wrong. And then on Tuesday, I think we forgot about the fact that Chinese chips were coming out, or the fact that maybe we don't want Chinese chips. Maybe we don't want all of our data stored on these. Maybe we don't want them in our data centers. So we kind of got away from that. Similar to another thing that it reminded me of was DeepSeek. Does everyone remember the DeepSeek AI coming to take away all the market share from ChatGPT? That's essentially what it was supposed to do. And there was a lot of scared people in the market when this happened. And I guess that is exactly what happened here. This is a quick recap, right? DeepSeek. This is just on ChatGPT to search DeepSeek. Yeah, that's it wasn't intentional, but DeepSeek was supposed to take out ChatGPT. They were saying that they could do what ChatGPT did for like $5 million, but it didn't include all the different costs of infrastructure and actually building the product. This was just kind of some of the surface level stuff that they could do in order to get it off the ground. But that didn't include the chips, the infrastructure, the data centers, anything else that they needed in order to build DeepSeek, the AI chatbot that was from China, right? So similar situation. Similar to what we've seen before, when you look at Alibaba replacing Amazon, being the Chinese Amazon, if you will, and it's not that it's a bad company, but I can't invest in it because I can't be sure that the financials are there. I can't trust that the numbers that they are promoting are actually the ones that we're seeing. So it makes it really, really hard to buy Chinese stocks, in my opinion, because I've gotten burned on them several times. We've seen DeepSeek. We've seen what's going on here with Micron and other chips. Is it possible that they come out? Yeah, it's possible. But do we want them? That's the next question. They probably can make them cheaper, but do we want them? Is it going to be stealing our IP? Is it going to be stealing our data? What's going to be actually happening on these chips? So that will probably come out, but we don't know if we're going to actually be using them. So the problem here is that they said 18 to 24 months, which we've said before. When that stock is going to see that downfall in around 18 to 24 months, or if that cycle is going to peak, that's when you want to start selling Micron. Because if you wait for that actual drop, that's too late, right? That's when Micron's going to go back to kind of commodity pricing instead of like this hype pricing. Everyone's buying AI. They can write their own prices. They can charge whatever. The demand is through the roof. They can't keep up. Well, 18 months is normally that kind of time frame where people think it's going to slow down. It's going to become a lull. No one's going to want this stock, right? So that is what we were seeing when it came to basically the chip shortage and what was going on with AI and the chip space in China and what they can do versus what's actually going to happen. So long story short, yeah, I sold that, lost a little bit of money, wrote some covered calls on it, made that money back, closed those covered calls, redid it again, and then I'm ahead, right? So did it go the way that I wanted? No. Would I do it again? Yes. Maybe I would set it for a little bit longer than 10 days, but you got to pay more to get those call options, right? The premium is higher. So maybe if it wasn't 4,200, maybe it was 5,700 or whatever it might have been to buy that same call option, same strike price, but a week later. And to be honest, I didn't really want to do a week later because I know that I'm going to be busy this week. So I tried to do it for last week and I didn't want to pay even more to go out 3 weeks. So I tried what I tried. It didn't necessarily work. It did, but I didn't execute probably as decently as I should have. I should have sold it on day one when it went from 4,200 to 5,600 in the matter of maybe 45 minutes. And that's probably when I should have just said, hey, I made 1,500. I'm out. That's it. Right. And then do it again. Wait for that next drop. Wait for that next entry. I made my 25% plus. I'm done. Cash me out. But I did not. I thought it could go higher. It did go higher, but I was not there in that position when it actually happened. So it doesn't count. It's like catching a fish and it doesn't make it in the boat. Doesn't count. So yeah, that's what's going on there. Did do some fishing over the this past Friday. My son turned 10 and we had a group go out of Ocean City. We caught a couple tuna, a couple flounder. Great trip, good times, but they did make it in the boat, so they do count. A little bit of a sidebar there. But yeah, I was talking about the stocks I bought. I really like Netflix. I think it's almost too cheap to ignore. I don't see that there's a huge problem there. A little bit weaker cycle of what's going on. We're waiting for the next Stranger Things, the next big blockbuster kind of Netflix title. A lot of people talking about the fact that you can hop from Netflix for a month. You can kind of pause it, go to Hulu, pause that, go to Disney, watch the shows you want to watch there. Then come back to Netflix, start that back up. And there's really no penalty for that, right? You can just pay month to month. They are getting more people on the ad tier product. So people are paying for that lower level. And they're also getting the ads on the platform as well. So that is another thing that's going decently for them. We need that next blockbuster. Live sports is still going. They're getting more into the podcast thing. They're getting more into games and stuff that are on the platform. So I'm still optimistic there. And the next thing is everyone is spending a lot of money, right? Netflix is spending more and more to make all this content that people are just eating up. They're going through it. And then they're on to the next thing. This is similar to what's happening in other major players in the market, right? We just saw Google come out and say that they were going to be spending around 180 to 190 billion dollars in capex, capital expenditures, building out new businesses, building up data centers, everything, Google Cloud, whatever else. We saw it with Tesla. Not a terrible earnings report, but capex was increased. Can we make this money back on whatever we're doing, whether it's Netflix making more shows, whether it's Google getting more AI demand and infrastructure built up, or if it's Tesla building out the new factories to get enough humanoid Optimus robots onto, into people's houses, businesses, wherever they're using these robots. Is there enough money that's going to come in off of the fact of these sales, right? We know that Micron, we know that Nvidia, they're making the money, they're selling the chips that are going into all these things, but they are realizing that profit now. Microsoft, Google, and Amazon, they are blowing through money, and we don't know if the AI return is going to be worth it. So every time they announce that they're going to be spending more, investors are getting more fearful because that profit is not there in this earnings report. The only thing we're seeing is we're spending and we're spending and we're spending. 190 to 205 billion dollars is I think what Google forecasted for the upcoming year, right? So that is absolutely massive. I'm going to search it up again on ChatGPT. We're going to look at Google Capex, and then we're going to share this one. So that is the thing that is scaring everyone off right now. It's not really earnings. It's not really EPS or revenue or margin. It is all of the fact that we are concerned about how much we are spending, right? So we're looking at CapEx for Google going up to 195 to 205 billion from the previous guidance of 180 to 190. More AI, more TPUs, new data centers, powering and networking infrastructure, capacity for Google Cloud, right? Training and serving Gemini AI models, which is catching up to ChatGPT on users. So ChatGPT did have that lion's share of the market, but now Google is catching with Gemini. We saw how much we thought of Google when ChatGPT came out, and everyone thought that Google search was going to be hindered. They weren't, right? They're still driving business. Google is doing really, really well. They did have a pullback, and on that pullback, I would potentially add some more Google shares, right? Either Class A or Class C. That means either GOOGL or GOOG. You're getting the same company, just a different class of the stock. Yeah, so we got that. We've got Amazon. I still really like that stock. We were talking about that one. I did have a question on the Facebook group at Let It Grow Investing podcast page. The link is in the description. What's a stock that you would feel comfortable holding for the next 4 years, right? This was the end of the World Cup. I posted this question. What stock do you want to see yourself hold for the next 4 years that you think, whatever happens, I think this is going to be a great play? That means some of the smaller ones that are a little bit more volatile, that might not be the stock that you want to hold for 4 years. Just set it and forget it. That might be some of the big players. It might be some Mag 7 stocks. It might be Costco. It might be Lockheed. It might be whatever you're comfortable holding for 4 years. Well, for me, I think that stock would be Amazon. I'd say Nvidia as well. I'd say Meta as well. I'd say AMD as well, right? I like all of these names. Now, there's a lot of stocks that I'm not too sure as to what's going to happen with them. What's going to be the next move for a SoFi? What's going to be the next move for a DraftKings? What's going to be for Nebius? I'm not too sure where they go. I'd like to think that SoFi can do great things. I'd like to think that Celsius can do great things, but I'm just not sure. So I'm a lot more comfortable holding some of these big names for a longer duration. I'm not even as comfortable with Lockheed. All it takes is one election cycle or the defense budget getting cut, and Lockheed goes down, right? They sell to the government. That's who their customer is. I know that the U.S. consumer is still going to need Amazon product. I know that they're going to continue buying there. And I mean, yes, could some black swan event come and say, no one wants to deal with Amazon anymore? Potentially. But then who, right? I mean, Walmart could step in. Like I said before, we're not necessarily going to Alibaba. I don't think that this is on consumer side. This is only the goods side of the business. But I don't think that Walmart is going to do the things in cloud and databases that Amazon does at all in the next 4 years. I don't see that. So as far as one stock to rule them all, I would probably say Amazon. And again, Nvidia, great company, best of breed. But what happens if we get another chip problem? What happens if we can't sell to China again? What happens if, a lot of the AI spending does get slowed down? and Google and Tesla and everyone else start building their own chips, there's a lot of question marks there. Maybe they start buying other Chinese chips. Maybe that does work. There's a lot of question marks around Nvidia as far as what the future holds. I still love the company. I believe they're best in breed. And I think that that's going to be the one that I'm going to buy today for the investing challenge because I think it's a great company. Now, do I think that Amazon has a safer moat around it? Are they a little bit more protected? If one business goes down, they can lean on other things. Nvidia is a chip company, right? There's a lot of them out there. Granted, Nvidia's best of breed, but I do think that other ones are going to come online. I just don't see anyone that's going to dethrone Amazon as that number one for all the things. I can't see it. So that would be my number one pick. So I talked about that. We've talked about Tesla spending so much. Oh, sorry. I should have turned this off. I kind of forgot that I was sharing my screen here. Tesla, Capex. Let's take a look here. I did want to take a look at what the Tesla's Capex was. Because again, it wasn't a hateful quarter. They had a ton of deliveries. I think it was 480,000 in the quarter. Apparently, ChatGPT doesn't want to do its thing. Maybe we will go back to DeepSeek. I'm not too sure. Let's take a look here and see if I can't find anything on Google. Let's go Tesla Capex 2026. And we're going to share this one instead. So Gemini comes through, right? Q2 Capex was 5.7 billion, up 142% year over year, pushing free cash flow to a negative 1.09 billion. And again, driving this stock significantly lower from like 425 down to like 310 level, right? So this is a huge selling off. We are looking at big spending for AI and computing, robo-taxis and cyber cabs. We're looking at the Optimus robots. Yes, we got the Model S and Model X are gone. So we're using that space to build these humanoid robots, production and testing. Also looking at their own chips. Again, you know, that could be another threat to Nvidia. So we're looking at all these different things. So again, I do like these companies. I'm not overly concerned about the spending with Tesla, with Google. It is noteworthy, right? It is something we need to be paying attention to because every time we're seeing this, and someone asked in another group that I'm in, what happens on Google after earnings if they have Capex go up? I said, well, it's going down. That is not even a question. If they come out and say that 180 to 190 in Capex is light, they're going to have a stock hit. It's just going to happen because the investors don't like the fact that they continue to spend through hundreds of billions of dollars and there's no profit. So that's just is what it is. That's how it's going to be until they get a footing as to when we're going to see some revenue and profits come in from spending $200 billion a year. I mean, that's just part of the course. So I think that is the thing that's holding us back right now. And I think a lot of these stocks are being hit, right? We saw a whole slew of AI stocks just getting obliterated. I mean, I can go ahead and pull them up. Let's just take a look at some of the AI stocks that have been crushed in the last 60 days, let's say. Let's go ahead and share this. Let's see what we got. This is just through Gemini. I was going to just kind of walk through all of them, but this might be easier. So let's see what they say. C3 AI trading around 815. Yeah. Intuit down 55%. CoreWeave down 60%. Right. That's massive. Alphabet down 20, and I think that's a buy. We've seen a lot of the software stocks just not be able to recover yet. We've got consulting and services, Accenture, Cognizant, Gartner dropped 40 to 55%. That's crazy, man. It's just like all these stocks are just getting obliterated. So I just want to be safe in what we're buying. Yeah, SoundHound, again, just not doing well, getting crushed from some of these things. Now, some of them got a little bit ahead of themselves. Some of them have already had a rough run, and if we go from there, we could take a look at just what like an I'm looking at my E-Trade. I could take a look at what Adobe is doing. We could look at what Broadcom is doing and just see what's going on there. ADBE. Let's pull this one up. And we'll take a look, right? So, yeah, we're at Adobe, right? 12 times PE on a trailing 12 months. It looks like it should have been around a $300 stock, but now these estimates have been cut way back. And now it looks like 253. So people are losing faith in the fact that it can get back to 300. CoreWeave, man. CoreWeave was running really strong too. Down 11% on Friday. Nebius, is that was the ticker, NBIS. This one has 34% of upside, but you can see the big pullback here, right? We were probably closing in on 250, and now we're at 187. We looked at CoreWeave over there. Salesforce, good amount of upside, but again, it's a stock that just keeps getting obliterated, right? We're 266 right there, and now we're sitting 100 points lower. So it's not just one stock. When I'm talking about Micron, it wasn't just one name that went down, right? We're looking at 70% of upside on Micron. And then you look at Yahoo Finance and they say, no, that's going to be a $950 stock for the next 3-4 years, right? I don't see that either. I think that this can definitely get back into the 1,200 to 1,300 range, maybe even by the end of the year, right? I mean, I think probably get there. Just depends on how much Capex we have, how much their sales keep going up, and what the competition looks like. So I'm still in Micron. I'm not selling it. I did add some when it got down to the 8s. I'll continue writing covered calls on it. I think that's probably a safe bet. And if this thing gets up to 1569, I'll probably write a covered call for a little bit longer out, maybe at like 2000. And if it gets there, maybe I have to sell it. Maybe that's just the move. Hopefully it would be next calendar year because I don't want to have that tax hit this year. But that's a whole nother situation scenario there. So Micron, man, I still really like the stock. AMD also got hit, kind of came back. I still think that this thing has a lot of room to go. Yeah, I mean, mild hit, right? We were probably up 560. We came down to around 500. I mean, from here to here looks far, but then you realize that we came up from 200 or 150 last October or September, and you're like, oh yeah, no, it's not so bad. We're okay. It's not so bad. We could have definitely been in a worse name, right? We're looking at all those other ones I just mentioned. I mean, they're painful. Broadcom, I still like Broadcom. I mean, I've been in this name for a long time at this point. Yeah, Qualcomm doesn't really seem to be doing that great. I don't really know what's up there. Apple, man, Apple feels like it's running safe, but they're also missing the boat on AI. They really are. And I guess time will tell if that's right or wrong. I'm not all that certain as to what to think there. Qualcomm, man, I haven't paid attention to this one all that regularly either. 166, man. I feel like I got out of this for significantly higher, like a while back, like a couple of years back. Maybe in the 210, 215 range, something like that. It's been a long time. It might have been even a call option that swept some of this away from me. It's been a long while. I don't know. I'd have to definitely check back there. Apple, 333. I think it's probably around flat. I don't really see the catalyst for this thing to go much higher. So again, I could make the argument to pick up something like a Netflix, something like an e.l.f. That's a little bit different than some of these chip stocks. Maybe you want to diversify on some of this dip. Maybe you want to buy some of these stocks on some of this dip. If you were trying to get into Micron at 12 something, it looks better at 9, right? I mean, it definitely does. So I would certainly think that if you're not there, maybe you could, but you're also getting late into the cycle. I mean, the time to buy is when we're hammering the table on AMD and Micron a year and a half ago. And I mean, is what it is at this point. So Netflix, I still like it. I mean, you got some upside here according to these people that sit behind a desk and do this all day. This chart does not look great. I know this was a COVID darling because of the fact that everyone was sitting at home. And then, it kind of just, I'll say fizzled out, but it's still a solid company. It's buying something that's just been kind of tossed out, but it's still a solid name. It's not bad. And you're getting a decent value on this thing. So that doesn't really scare me so much, right? I mean, it's 21 times on a trailing 12 months. If we look at tip ranks, let's go ahead and share this one instead. Whoops, did that not pull up? Where did it go? And let's pull this thing up again. Additional reports. Why did it just do that to me? We'll figure this one out. Trying to figure out what is going on with the current PE ratio. All right, this is not working. Let's go about this another way. Let's say share this tab, current PE of NFLX, and then we're going to look at the PEG ratio as well. It's a 22. I mean, that's not hateful on a stock that was over 30 times earlier this year. You're getting, by 20-some% discount on where it was trading. PEG ratio, NFLX. And remember, we want to be below a 2. The S&P generally trades at a 2, and you're looking at a PEG ratio of 0.64. A lower figure reflects a compressed PE of roughly 22 against their robust 34% year-over-year earnings growth. Man, that's a solid earnings growth. Forward-looking PEG ratio 151 to 1.53, and that's still not hateful, right? So I like this stock. PEG ratio closer to or below 1 indicates that a stock is fairly valued or undervalued relative to its expected growth. And it's trading 46 to 63% below its historical 10-year averages. So you're getting it at a discount. It's not growing as fast as what it was. That's part of the reason. It's kind of shot to the other side. And I think that this is going to bounce back. But really, when it comes to Nvidia, I meant to type PE, but it figured out what I wanted because it's smarter than I am. Trailing price of Nvidia is 31. We're still looking at this stock that is, I think, just a coiled spring that is just ready to let loose. PEG ratio on, NVDA. I think that this thing is cheaper than what Netflix is. And I still like the name. And I know I told you there's other reasons to be careful. There are other competitors out there, but Nvidia is still best of breed to me. So, right, you're looking at a PEG ratio of 0.29. Forward looking is a 0.53 to a 0.57. A normalized 3 to 5 year long-term growth projection baseline of roughly 40 to 50% against forward earnings. Below 1, we already went over that. It's compressed roughly 52% below its trailing averages. Lowest growth adjusted valuation multiple since 2019. So again, I still really, really think that Nvidia is a solid stock to buy. When you're looking at it, you've got a fair amount of upside on this thing. I'm very much comfortable buying it. I told you guys what I'm buying. I'm not sugarcoating any of that. I'm buying Netflix and e.l.f. and Celsius. I bought some more silver. I bought some XYLD. I'm trying to go through the list just off the top of my head here, right? What else we got? We've got this E-Trade. Let's share this real quick on Nvidia. 50% of upside on a name like Nvidia. That doesn't happen all the time. I mean, we've seen it for a couple of years, but that's not normal on something like this. And I think the demand is there. I feel like AMD kind of went ahead a little bit on some of the stuff that they were coming out with, but now you got Nvidia shipping the H200s back out to China. You got a lot of the things that are blocking them kind of getting out of the way. So for me, I do like Nvidia. I'd like to keep what I've got, maybe add a little bit more. It's a fairly full position, but there's always got to be some room for some high quality, best of breed names. That's just how I look at it. So this is the Let It Grow investing challenge purchase for this week. I'm putting $200 in my own money. Almost gets us a full share. And then just to kind of summarize, what's your top stock for the next 4 years? Which one do you want to hold through thick and thin, regardless of what the elections are going to bring, regardless of what Iran or Iraq or anyone else brings? Where do we want to be? Right? I'm looking at this. I still think Amazon is probably one of the top picks for me. I hope that a lot of things go well for them, and I can start to see some things rebound better than how this company has been positioned in the market. I still think that it is a great company that should have a really strong path forward. Is it going to be the one that gets you this 30x play? No, it's not. I'm aware of that. But I think as far as I'm saying, over the next 4 years, it's got a consistent path. It's got a lot of right things going for it. It's not just in any one industry. It's in a lot of different markets. There's still room for growth. We've seen it with their, AWS. We've seen a lot of this growth over time, and I think that Amazon can deliver on at least the majority of these fronts. Is everything going to be a home run? No. Maybe they're just hitting singles and doubles all afternoon, but they're going to continually keep doing this. And I think they're just going to continually keep executing on at least the majority of these businesses. Is something going to be a flop? Maybe the pharmacy stuff doesn't go the way they want. Maybe something else doesn't work. But I think the majority of what they're going to do, they're going to do well. So I don't really think that they have any they have competitors in all their businesses. But I think if someone comes in and they say, "Oh, well, Amazon just moved into town. They're coming for your business." I think that's a real fear. I don't know that any one company can take them out. Could it be a combined front? Maybe, but I still think that it is the safest big player on the porch that has just years of growth left in it. So that's what I got. That's what I got. I mean, maybe the government breaks them up. Maybe they get too big. Maybe they get too powerful. Whatever. There's always fears. There's always weaknesses. There's always threats to a company that we have to watch out for. But I do like this stock for the long term. That being said, I'm buying Nvidia tomorrow, which I know sounds kind of hypocritical, but Amazon, well, they are on this list. They were at 227 at the beginning of the year. Nvidia was at 190 at the beginning of the year. So both of them have moved up a little bit. Yes, all the other stocks on this list have moved down. Nike, SoFi, Salesforce, Adobe, AMD is up significantly. Microsoft is cheaper. I still really like Microsoft right now. Microsoft was 473 at the beginning of the year, 381 now. I still very much like Microsoft. I still very much like Celsius. I think a lot of these names could be purchased. I'm not too sure about software. I'm not 100% convinced there what's going to happen with all the AI platforms basically creeping in on their business, right? It's basically Amazon's coming in. Now it's kind of like, oh, AI's here too. I can't necessarily just keep making software products. So I've got a lot of fears there. Nike is more of a long-term play. I don't think that that's popping right back. I've said that for a while. I do think it comes back. I don't think it's right now. I think there's too much fear out there and too much uncertainty as to what happens there. So still a strong list. And when I made this list, I told you guys not everything's going to be a buy every week, right? Not every quarter is going to be the quarter to buy this stock, right? Just because I put 13 names down doesn't mean they're all a buy for this year. They are just going to be something that I'm looking to buy throughout the year. And I'll be honest, Adobe is probably the one on this list where I'm like, I just don't know anymore. I want it to work. I really do, but or pause, comma, whatever you want to say. It just doesn't give me the warm and fuzzy feeling of what I thought that this would do and how it should have turned around. So be that as it may, maybe it doesn't make the list next year. Maybe we got to make some changes. But that's what I got for you guys today. We covered a lot of different stocks. We covered a lot of names that I'm buying. We covered some stocks that we want to hold for the next 4 years and why. We've covered a lot of different things here. So hopefully that gives you a little bit of insight as to what I'm doing, why I'm doing it, and maybe it gives you a little bit of homework as to where you want to put your money for the next 4 years, the next 10 years, right? Or maybe you're just saving up for a new car and new house tomorrow and you want to make an extra 10% in the next 18 months. I don't know. But maybe that gives you a little bit of insight as to where I'm at, maybe where the market's at. But if it does, please make sure you like, subscribe, and share. It definitely does help the podcast. I greatly appreciate it. It's like a high five or a pat on the back or whatever. There are links in the description. You can definitely help us grow that way. You can also hop on the Let It Grow Investing page on Facebook and ask any questions, voice some comments, concerns, answer some of the questions that I throw out on that page. Right. So that's what I got for you guys today. Thank you very much for stopping by. I will catch you in the next one. Take care.